Hey everyone, it's Wednesday, March 24th, and we're going to be taking a look at General Electric, ticker GE stock. We'll be doing a brief technical analysis today, looking at support levels and resistance levels, as well as moving averages for all relevant time frames. Please stay tuned for more analysis. We're going to start off by looking at this 20-day, 30-minute chart. Turn the crosshair off for you. Okay, so we had a local high here at 1441.5 about 2 weeks ago, and then 2 days of selling off to get to a low around 1195. And it took about a week for the price to climb back up over this 200 MA, where it was rejected. We had a local high of around 1371. A couple things to note here while we're on the 20-day, 30-minute chart. One thing is if you look at the moving average convergence divergence peaks, the MACD peaks, and you look at the momentum, you'll see that in some of these previous peaks of this current bull run that we're in, these peaks were actually higher, and we started to have momentum drop off right here before the sell-off occurred. So this is a sign to me that buying pressure is slowing, that the number of buyers at this price is lessening, and ultimately we just lost momentum and weren't able to push any higher before having a correction or a pullback. A couple other things to note: we closed low today and we closed low yesterday. We broke through that low today, and that's a sign in the short term, at least during this week. I would expect tomorrow to be a red day. I don't think we'll have any trouble getting down to this $12 range. And that's about all I can tell from the 20-day, 30-minute chart. So let's go to our daily chart and take a look at that and see if we can glean any information from it. We'll go to 6 month, a daily, and we'll zoom out here. So you can see that we're currently trading underneath the 20 EMA on the daily, but we are trading over the 50 SMA, which has been a support level this year. And earlier in February, it was an active support. So I'm calling this out as a support level at 1220. The price on its way down might hang up there. It's possible. Now that's good information to have, but I don't see the full story here. I think we're going to have to go zoom out to the weekly charts. So if you look at weekly, suddenly this correction makes a lot more sense. We're trading underneath this 200 simple moving average. We recently had a break up through it. GE is starting to pick up again after a couple years of not doing so hot, and now we're trading above the 200 MA. So this is a normal pullback to the 200 MA. On the weekly chart here, we have 4 weeks that we've been trading above the 200 SMA on the weekly chart. About 4 weeks ago, we broke through the 200 SMA, which is a good sign. That's a bullish signal, but we're experiencing a period of consolidation after that breakthrough, and you can see why. It's been a long time since we've been in contact with the 200 MA. So of course there's going to be some ups and downs. When we come in contact with it, there's going to be some consolidation period. So as for the consolidation, how far down could it go? Where could it go? So right here at about 1220, 1215, 1220, that is where the 200 MA is at currently. So we want that to hold. On the weekly chart, you can see that we are experiencing a period of consolidation after several weeks of trading above and around this 200 MA on the weekly. Possible that the price could pull back to about 11. This shows the 20 EMA being about the 1130 level. What we're really looking for here is a crossover of this 20 EMA crossing over the 200 SMA and upwards. I would not hold a long position until that happens. So if our current predicted low is around 1130, let's double check that with the bear flag that we see forming on the 20-day, 30-minute chart. Going from a high of 1441.5 to a low of 1195, back to a high of 1371, should deliver us a low of 11.25. So 11.25 right there. And we go back to our weekly chart, and you can see the 20 EMA is right around 11.25, 11.26. I think that will be the low. To me, this looks like it could take a couple weeks of consolidation to go down to this 11.30 EMA, bounce off of it, and to have the 20 EMA cross over the 200 MA. If that happens at all. If it doesn't happen, I think it's likely that we'll be heading down towards the $9 range. That's the next support level. We'll go to the daily, and you can see the 200 MA is right around 890, 893. So that's what I mean when I say not this 50 MA holding. But if we break through the 1130 level and we break through the 20 EMA on the weekly chart, that's why we could be headed for $9. Hey there, thanks for watching this video. Let me know if you enjoyed it. Please like and comment and subscribe for more content, and let me know if there's any other tickers that you'd like me to check out.